There's seek and destroy, where it's a day that looks like a really good trading opportunity, and all of a sudden it hands you your ass. It starts chopping back and forth. As soon as you even think it's a seek and destroy day, you stop trading, turn the charts off, walk away. I have blown accounts in bonds. I have blown accounts in S&P, and I've blown accounts in Forex, getting caught in seek and destroy days, pushing it, thinking I'm going to be able to come out of what I was doing and making it worse. So one of the best things you can do is, in all of your studying, really put focus on days where you see it going higher high, lower low, higher high, lower low, higher high, lower low, and then all of a sudden later in the day it takes off and just blows out one other range, and that's seek and destroy. Like, nobody's allowed to be making money in that day. And that's hard. It's demoralizing when you fall victim to it, and I've done it. And unfortunately, there are times where I don't know when it's going to creep in, but here's how you know when it's likely to. It's going to be right before a big like FOMC day. It's going to be before a rate announcement type thing, some kind of high impact news driver where the market participants are going to get cleaned out. And why would that happen? Think about why that would take place. Why would you expect it to happen? Because traders are going to do what? They're going to take a position before the report, or whenever that big volatility news driver is going to hit the marketplace and create these big CPI runs, or like we saw in non-farm payroll yesterday, where it was one-sidedness and it was a big 60 handle move drop, right, just like that in 1 minute. There are people out there that want to participate in that, and they subscribe to their opinion, and they want to get in the day before. Well, I admire their courage. It's rewarded with pain, because this is exactly why that seek and destroy profile will manifest itself, because that report is anticipating, or in the minds of traders with that report, they're all anticipating a big move, and everybody has an opinion. A lot of people are going to have a bullish opinion. A lot of people are going to have a bearish opinion. So for good measure, the algorithm does what? It does takes the initial short-term little intraday high out, brings people in on breakouts going long, and then it goes down and takes out a short-term low, knocking out their stop loss that went long and tripping in new traders going short with a breakout strategy. Then it goes back up to that short-term high it just formed and cleans that out. So now those that went short from up there and were lucky, now they're out of the marketplace. And it keeps doing that same thing all day long. Every high is taken out, every low is taken out. That's seek and destroy. Nobody gets to participate in that move. And as soon as you recognize that happen, or that happening in the marketplace, maybe you forgot about the economic calendar. Maybe you didn't pay attention to what's likely to occur tomorrow. That is when seek and destroy is likely to occur. Or it can happen intraday before the FOMC. This is why I tell my students, don't trade FOMC, because you're likely to get caught up into a seek and destroy day before the 2 o'clock rate announcement comes out, and then there it goes one direction, and you wait for it, because FOMC is always a two-stage event. There's the initial move that's usually fake, and the real move is the opposite direction. So these are conversations that are just too fucking good for a book. Okay, they're just too good for a book. And I know these people that like to take my shit and rebrand it and all. They're going to take this stuff and they're going to include it in a little Amazon real quick books and shit. And they're not going to credit me, but you've heard me here talk about it, and it's in my mentorship stuff too.